Welcome back. I assure you there is plenty to talk about today because there's so many stocks on our radar. So let's get straight to it. First up, we have Hindalco. It was a good set this time.
Well, yes, Novelis came out with a set of numbers, Sonia, and that's the factor that drives the operating profit for Hindalco, and those numbers look good. On a sequential basis, if you look at it, there is a bit of a spike up in terms of volumes. There's a recovery or there of around 5-6%, or you like that. On a year-on-year basis, it's still relatively lower. But the good news is that the destocking of cans, well, that's likely to have taken place, and that's what the management said even in the call. So good news. And that's what brings the adjusted EBITDA per ton. Remember, the last few quarters, it went down to around $376 per ton. The street got very, very nervous. Then they were talking about $500 per ton, but they guided for Q4. So that's come in earlier in the second quarter itself. You like that. And the reason is two of their geographies did very well. North America as well as Europe, which is a larger proportion of sales volume as well as of EBITDA. Both of them saw good recovery in the EBITDA per ton. You like that? Going ahead, they are saying that, the EBITDA per ton for the Q3 will be in this vicinity of around $450 to $500. But they're saying from Q4 onwards, they say things looking up. Operational efficiency will play out. You have, the spreads as well that are improving. And they're guiding for good times ahead from there on. The debt number stays more or less constant. So you like these set of numbers, expect the stock to open up in the green. But Vivek is joining us to tell us about Power Grid. Vivek?
Well, good morning. A very steady set of numbers from Power Grid this time around. Muted top-line growth, but largely along expected lines. So revenues higher by just around 1%, coming in over the 11,260 crore mark. EBITDA higher by 5%, and this, so it has come in at close to 9,908 crores. Margins aided by lower transmission expenses. So margins have expanded over 250 basis points on a year-on-year basis. Higher other income, lower transmission charges have aided the PAT. So PAT has come up almost 4% higher on a year-on-year basis, coming in close to the 3,780 crore mark. Now, transmission revenues this time around largely flat, 10,990 crore versus 10,920 crore. Slight positive surprise. Consultancy revenues were expected to dip, but on a year-on-year basis, it has seen a slight up move.
Okay, all right, Vivek, thanks a lot for that. I'll take it yet again because I'm looking at Shree Cement, and those numbers looked in line to mildly better than what the sheet was working with. Two big numbers, look at the revenue and look at the EBITDA, the absolute numbers. In line, revenue was a little bit better. And on revenues, if you look at it on a year-on-year basis, well, you have a growth of close to around 21%. But you need to keep in mind that the volume growth was only around 10%. That doesn't mean that realizations went up by such a large deal. You have a component of power revenues in there. So we'll have to find out how much of that was there to actually find out how much did the realization improve in the past quarter. The calculated EBITDA per ton, no worries out there. Second quarter running, it's up above that 1,000 rupee mark, another around 1,060. You like that number, and it's on a very, very low base. So that looked good. The profit number, well, that jumped up because effective tax rate was relatively low. So that's why it appeared that the PAT number was much better. And the cash flows as well have improved at around 1,800 crores odd. Give and take everything, they have expansion coming on stream. Well, you like what you see in terms of these numbers. So expect the stock to open up in the green. And we wanted some more details. For that, we'll be getting the management at around 9:30 a.m. later today. Mr. Bangur will be joining in to help us out with some of those finer details.
All right. Well, let's hop across to Upasana now. She's going to talk about Cummins and the Q2 numbers and how it shaped up this time. Upasana, over to you.
Well, it was clearly a margin beat, and EBITDA margins expanded by almost 290 basis points and stood at somewhere around 17.8% versus the poll of 15.3%. While coming to the revenues were down below our polar estimates, so somewhere around 2,000 crores, and it came in at 1,899 crore with a downtick of almost 2.7%, while lower domestic and export sales led to the fall in revenue growth. Well, domestic sales were down 2% on YoY basis, and they were down by almost 19% on quarter-on-quarter basis. Export sales were down about 4% on YoY basis and up almost 2% on quarter-on-quarter basis. PAT was up almost 30%, and it stood at somewhere around 328 crores, which was above our poll number of 288 crores. Well, rise in other income and fall in material cost aided the PAT growth. Well, coming to the outlook shared by the company says that the prior two quarters witnessed a demand shift as both CPCB2 and CPCB4 Plus products are allowed to be sold till June 2024. And the company expects the demand to normalize and sustain for the rest of the year. It is also optimistic about the prospects of continued profitable growth going forward.
Upasna, thanks a lot for that. Let's move on and talk about Apollo Tyres because, it was a good set of numbers. The top line growth has been in a single digit for a while and that continued this time around as well. But the real kicker came in the operational performance for Apollo Tyres. The margins, just look at that, 18.5% margins compared to 12% same time last year. Big up move in the core EBITDA as well. That's because crude prices had fallen, rubber prices had fallen, and that aided the company's margins. If you look at both their businesses, which is the geography-wise, right? The Asia-Pacific and Middle East region is one, and Europe is the other one. It's the Asia-Pacific region which has done very well. Just look at the move there. Revenues have gone from 4,280 crores to almost 4,500 crores, and big move in EBIT also for the company. Actually, that's the other way around. The EBIT went from 200 crores to about 670 odd crores. The Europe region, though, has been in low single digits. So revenue growth of 3% and the EBIT largely flat for the Europe region. But it's the Asia-Pacific region which has done very well. So I'm going with green over there. But let's go across to Mangalam. He's tracking IRCTC. Mangalam, how did it look?
CTC overall was a good set of numbers, but the numbers were led by their other verticals and not their ticketing vertical. Ticketing business was slightly soft. So let's run you through the numbers. Revenues grew by around 23.5%. The EBITDA grew by about 20%. Margins were largely stable around that 37% mark. And we saw the company report a net profit growth of almost 30-odd%. The mainstay of the company's operational performance is ticketing. Out there, the revenue and the operational performance, the EBIT grew by just around 9-odd%. So that was stable and soft. But the other segments, catering, picked up. There was just a revenue growth of 29%, but an EBIT growth of 110% out there. And while the water business saw a revenue growth of just 4%, the EBIT growth out there was also 80%. The company reported sharp turnaround in their state Tirtha business as well as losses in the tourism business reduced. So suffice to say that there could be some green on IRCTC today despite the soft ticketing revenue business, because now the third quarter there would be some more contribution coming in from ticketing while these businesses have turned around already.
All right, Mangalam, thanks very much for that. Well, let's focus on chemicals, right? I mean, generally it's not been a great time for chemical sort of earnings, but the debate is on whether things are bottoming out or not. Deepak, Nitrite, Vinity Organics are the two we're focusing on. Sonal has got details. Sonal, hi, morning.
Good morning, Prashant. Well, for these two, definitely there's some sequential recovery, and that could mean that, yes, prices are improving, or maybe it's coming on the back of volumes as well. For Deepak Nitrite, it was a good set, both on a YY and on a quarter-on-quarter basis. Revenues were down 10%. However, it was higher EBITDA, up 12%. Margins came in at 17% versus 13.8%, leading to a profit growth of 17% as well. Even on a quarter-on-quarter basis, it was a good growth. Revenues, while they were flat, EBITDA was up 44%. Margins were higher by 500 basis points, leading to a profit growth of 37%. So going with green on Deepak Nitrite, this was led by their phenolics division. For Vinity Organics, yes, YOY continues to be a decline for this one. Revenue down 21%, EBITDA down 25%, margins down 200 basis points. Profits were down 27% as well. But on a sequential basis here as well, there's slight recovery, which the street might like. Revenues up 4%, EBITDA 1.5%, and profits also up 1%. And this trend is largely seen in commodity chemical companies, the likes of Vinity Organics, there's Deepak Nitrite, Epigral yesterday, and some of the chemicals for Aarti Industries as well. So this is a trend that we are seeing in this quarter.
Okay, thanks a lot for that, Sonal. Well, let's go across to Ekta. She's here to tell us about JB Pharma's Q2 numbers. Ekta?
Well, yes, JB Pharma is the one that we're talking about. Revenue up around 9% on a year-on-year basis. Margins have done better, 27.6% versus 22.8%. And profit up around 33%. Q-on-Q also, the margins have expanded. Domestic formulations, which is basically the bread and butter of JB Pharma, they have a lot of big brands within that, was up around 11% year-on-year. International business was up around 7% year-on-year. CDMO, which is basically lozenges, they did around over 115 odd crores, so they maintained that revenue run rate of over 100 crores within that business. And the first half FY24 net debt has reduced by 248 odd crores. So all of these are probably going to result in the stock seeing further upside in today's trading session.
All right, thanks very much for that. Balrampur Chini is the next one we're focusing on. Surabhi's got details on this one. Surabhi, over to you.
Balrampur Chini, it was a good set of numbers. The revenue growth of 38%. Gross margins were higher due to better cane crushing and higher recovery. So gross margins expanded nearly 1,000 basis points. EBITDA turned positive this time around at 165 crores versus a loss of 16 crores. And same with PAT, it is a profit of 106 crores versus a loss of 29 crores. Now in the sugar segment, the revenues were up 15%, led by 4% increase in volumes and nearly 6% increase in realizations. In the distillery segment, the revenues were up nearly 2.5 times with a volume increase of over 100%. But the margins were lower in this segment due to higher transfer pricing. But overall, a good set of numbers by Balrampur Chini.
Okay, thanks a lot for that, Surbhi. Well, let's do a quick recap now for top stocks. Stocks with positive news flow. There's Hindalco, Power Grid, Shree Cement, Cummins, Apollo Tyres, IRCTC, Deepak Nitrite, Vinity Organics, JB Chemicals and Balrampur Chini. Well, guess what, guys? There are no stocks on our radar that is likely to open in the red today. So let's take a short break. On the other side of the break, we'll be joined by UBS Securities Emerging Market and India strategist Sunil Tirumalai and the head of India Research and Banks analyst Vishal Goel to discuss Indian sectors and stocks to bet on. Stay tuned.